Now, there was also speculation today that nations in Europe are going to pledge more aid to Greece as the European Union tries to figure out how to contain the region's debt crisis. So we've assembled a taking stock think tank on this issue. Charlie Gushee, he is the managing director, global equity sales at Auerbach Grayson. Also with us from Washington, we have Jacob Kirkegaard. He joins us from Washington for the Peterson Institute for International Economics. Jacob Kirkegaard, there seems to be a little bit of, well, disagreement in Europe. Last week, Jean-Claude Juncker, he came out and said he's the head of the Eurogroup ministers. He says no more money for Greece unless there is some kind of refinancing guarantee. Today, we get EU Commissioner Olli Rehn saying restructuring of Greek debt, that's not even on the table. Which is it?
Well, I think first of all, we need to be careful with interpreting all these different public statements coming out of the Eurozone. I mean, we're fundamentally engaged in a zero-sum game here among elected politicians, and they're going to have to basically show that they disagree. Now, that doesn't mean that there won't be a deal at the end of the day. And if you ask me what the deal will encompass, one, Greece will get more money by the end of July, and there is a likelihood that we will see some voluntary rollovers of private sector debt by some of the large European banking institutions that hold that debt.
Charlie, come in on this topic, because if there is a restructuring, is it the banks in France, the banks in Germany, they're going to take it on the chin?
I agree, first of all, with what Jacob said. Everybody at the table has a gun to the head and has to have one. Nobody can say yes without a lot of pressure. You're elected politicians. You've got bank negotiators. You've got IMF, EU people who don't want to set the precedent without a lot of pain.
You've got people rioting and demonstrating in the streets of various European countries, too.
Sure, and they need it. They need it in order to say yes to anything. And the second point is that the pain, quote-unquote, that will be taken by the banks who own these bonds is going to be limited. That's the point of the whole negotiation. They'll stretch out maturities. They don't want to create an immediate event that would create a default and therefore a mark-to-market on the debt that they own.
Now, is that a technical issue, Charlie? Is that the idea that they're not going to be able to restructure the debt, but there won't be a technical default?
Absolutely.
We're going to controlling the debt crisis in Europe. That's the topic for our Taking Stock think tank. We have Charlie Gushee. He is the managing director of global equity sales at Auerbach Grayson. Also, Jacob Kirkegaard, research fellow at the Peterson Institute for International Economics. And with us now, we also add Michael Woolfolk, managing director and senior currency strategist at Bank of New York Mellon. Michael, good to have you with us. This idea today, when we see the dollar not strengthen against the euro, but the Swiss franc make gains, is that an indication that people are still scared about what's going to happen in Europe?
I think that some of the tensions perhaps have been alleviated in Europe. However, the dollar, as many problems as exist now with the U.S. dollar, I think you see other currencies that benefit from the safe haven status. You see some modest safe haven behavior. The Swiss franc may benefit. You really need to have a severe crisis of confidence for the U.S. dollar to show signs of weakness. And we already had a technical test of the 140 level in the euro dollar, the downside. That was rejected. I think that right now you have to look elsewhere to sell the euro.
Charlie, does this also highlight the role of China? Because it seems as though China has been willing, at least in the past, to come in and buy up the debt of nations in Europe that have been in trouble, and they maybe have an ulterior motive, that they want a reserve currency other than the $3 trillion of U.S. dollars that are sitting in their accounts.
Well, it's China, it's other Asian buyers. We suspect that they're diversifying from what used to be close to a pure dollar portfolio. So I wouldn't be surprised at all to see those numbers continue to climb. And you know, remember, the big lesson at the end of the day is that this is not a question of which is the beautiful currency, but which is the least ugly that you can pile onto. And I think that's helping sustain the euro at the moment also.
Jacob Kirkegaard, come in on this topic. Your thoughts on the dollar versus the euro and whether investors are piling into currencies other than the greenback.
No, I absolutely agree with the previous comments that we have an ugly man's contest going around here. And I think with respect to the Chinese action, you know, it's worth remembering that one, of course, that the dollar is pegged to the renminbi. So if the euro goes up, the renminbi also goes down. Euro goes up vis-a-vis the dollar. The renminbi, the euro also goes up against the renminbi. So the naked self-interest of China here is quite clear, especially given that the European Union and the Eurozone is actually a larger export market for Chinese goods than is the United States.
So, Michael, come in on that. This idea that China benefits because if the euro gains in value against the dollar, that means it's gaining against the Chinese currency. That's good for their exports. They win.
Well, this is, I think, the way to look at it. Last week, what we saw was the market very much wanted to buy U.S. dollars and sell euros on the Greek debt crisis. China, on the other hand, was on the other end of that trade. As we got towards 140, China wanted to buy euros on dips. As we got closer to that 140 level, they were in there. And I think that they'll remain there at the 140 level, willing to buy euros on these dips because they need to diversify into a second. They need to have a second reserve currency in the world. They intervene principally, if not exclusively, through the U.S. dollar. They're a natural holder of U.S. dollars. They don't feel comfortable with that. So although you do hear a lot about China intervening in the market to maintain a currency that perhaps is not market level, it is not doing so necessarily to benefit of its exports. It really has a issue with its the structure of its balance of payments, specifically that its capital account has not been liberated yet. Once that happens, once Chinese are able to invest in FDI in the United States, able to invest in our stock market, we may have a solution where, as we saw back in the 1980s with Japan,
that capital flows to the United States.
Precisely.
And then, Jacob Kirkegaard, this idea that China may be a double-edged sword then for the European Union. If China becomes a creditor nation to the European nations, then they can exert political power there.
Well, I think, quite frankly, the risks of China buying influence over European policy is somewhat overrated. I mean, you know, we have heard these rumors that China is buying up peripheral Europe to sort of put pressure to get the EU to lift the arms embargo against the Chinese. Well, that hasn't happened, and I certainly don't think it's going to happen. So I think that line of argument is not something that I subscribe to.
Charlie, come in on the topic of private firms in Europe and the privatization process. Are we going to see more private capital flow into places like Greece if a privatization program actually takes hold?
Well, there will be a privatization surge coming from Greece, coming from Portugal, and probably other spots as well. China is certainly going to be an active bidder there. The history is that they got pushed back politically and have looked mostly to emerging markets in terms of where to deploy that capital. But the fact is that when you have desperate sellers and not other buyers stepping up, China's got a pretty good track record of the last 4 or 5 years of stepping in on opportunistically to buy attractive industrial assets, and they'll do the same in Europe.
Desperate sellers. There was an example last week about the national lottery in Spain. That's going public. Is there going to be a wave of privatization? Will there be enough capital to soak that all up?
Sure. The question is getting it done. I mean, in Greece, they talk about theoretical numbers of huge amounts of assets running into the hundreds of billions of euros worth.
But you use that word theoretical.
Exactly. And the reality is they're having a very tough time lining up 50 billion euros to get actually moved into the market, and push is coming to shove.
All right, I want to thank you very much, gentlemen. Charlie Gushee coming to us from Auerbach Grayson, Michael Woolfolk, Bank of New York Mellon, and Jacob Kirkegaard from the Peterson Institute of International Economics.